G'day. This is Roy from Humanising Money Matters. The financial year has really got its boots on, and we're now just past December 31. And that means we've just completed 2 quarters for the year. So it's time to put our mathematical hats on and think about how much more money we need to put aside for tax. Now, following on from the first video in relation to this, we're going to stick with the same example of $60,000 profit, which will give you around $12,000 tax. This calculation's a bit easier because we already know the figure that we've got to account for the whole year, and now we know that we're halfway through. So therefore, if your profit's sitting at around $30,000, you need to have about $6,000 set aside for tax if you're on track. Now, the ideal time to be looking at this is as close as you can to after December 31, say somewhere between mid to end January, because once you get past the holidays and things get busy again, it can fall off your radar, and suddenly you're off and running doing things that and you've forgotten all about it, and it goes to the bottom of the priority list again. So if you want to, again, another note to put in your diary, mid-January, say January 15, have a look at what your records show and get them up to date to December 31. So for the sake of this exercise, we're going to assume that you've made the same $15,000 again, and that gives you $30,000 profit year to date. Double that is $60,000. So therefore, on $60,000, you've got $12,000 tax. So then you cut that to get back to December 31. Okay, I need to have $6,000 set aside at this point in time. You've already got $3,000 in your tax account. So in order to have $6,000 put aside, you simply add another $3,000 to your tax savings account. Obviously, the number, if your profit is less or more than this figure, you really need to be in touch with your tax agent if you think that if the calculations are a little bit too robust for you. But always keep in mind, whatever your profit is, once it goes past that magical figure of $18,200 at any time in the year, you're going to have to start to plan to pay tax. So whether your profit is $22,000 or $40,000 at the halfway mark of the year, you're still going to need to plan to have some money put aside for tax once you've completed the financial year and your tax agent accountant is looking at putting your tax return together to give you the final outcome. So hopefully, again, that is reasonably clear. Just to reiterate, if your profit's around $30,000, but double it to get to $60,000 to estimate for the year, that's from the previous example, that's around $12,000 tax, and half of that to come back to December 31, you should have $6,000 set aside. So if you've put your $3,000 aside from the September quarter, you add another $3,000, so then you've got $6,000 in your kitty, and therefore you're looking pretty good to have your money put aside for tax when the time comes to have your tax returns done at the end of the financial year. So once again, if it's a little bit unclear, perhaps go and have a look at the previous video as well as this one. And if you're still not clear on what calculation's trying to achieve, reach out to your tax agent, tax accountant. I'm also happy to take your calls and your inquiries to help you in any way I can with the management of your business and the management of what you feel you might need in terms of tax coverage, and also happy to help you with just any other aspect of the running of your business. So good luck, and as I said, reach out if you need help. And this is Roy from Humanising Money Matters, signing off, and hope to talk to you soon. See you later. Bye.